Good afternoon, everyone. Thank you very much for joining me. This is the NFP live trade with myself, Russell Shulman, Senior Market Specialist at FXCM. Today is the 2nd of September. It's 20 past 12 GMT, 20 past 1 UK, 20 past 2 ZA. Just going to bring up our high risk investment warning. I'm going to keep this on screen for a few moments. Just want to check, can you guys hear me and see the screen okay? Should be seeing the high risk investment warning. Just let me know, type in a Y if you can. I'm getting an audio reading here, so it should be good. Okay, cool. Thanks, guys. Thanks, Anne Purvis. Thank you. Clearly, it's not the 6th of May. I don't know how that snuck in there, but it is the 2nd of September. I'm going to bring up the market commentaries disclaimer. I'll keep this on screen for a few moments as well. All right, and here's our references: MarketScope 2.0, Forex Factory, and TradingView. Let's bring Forex Factory up first. All right, so here is the data that we'll be monitoring. You can see the non-farm employment change here, expected at 295. And we want to definitely keep an eye on that, and we want to keep an eye on this guy here, the 0.4%, because the job market now is going to be very much in focus after last week's Jackson Hole. The Fed, specifically Fed Chair Powell, made a point saying that there is an imbalance in the job markets. So and when he says an imbalance, he's referring to it being overheated. So if there's going to be an upside beat to this number, I would expect, and of course we'll watch as it unfolds, but I would expect a dollar bid. If it misses, probably the opposite. So we'll just keep an eye on that. But it's a very interesting market to be trading this afternoon. And let's just take a look at this screen here, which is going to be TradingView. We'll go down to the 1 hourly here. Super slow. All right, sorry about that. All right, so what we've got here on the top screen is our real rate. So I want to see after the announcement which way the rate goes, and this will be our dollar. We can take this out. Don't think we need that. So we'll just keep an eye on that. The reason that I'm looking at the US dollar on TradingView is because we are doing a live trade on a live account. And as an FXCM employee, I actually don't have access to the US dollar instrument because it's a FXCM CFD. They've created it, and compliance doesn't let me have access to it on my system. So we'll just look at it on TradingView. That should be fine. And then what we want to do is just run through our the way that we're going to be running the trade. I'm just going to take this off. We don't need it right now. We're not going to put on a position before the print. Okay, we want to see the print first. So either it's going to beat, or it's going to come in as expected, or it's going to miss. Those are pretty much the possibilities. And then we want to see the initial movement. So the initial movement is going to be either to the upside. We're going to be trading euro US dollar. So if there's an upside impulse, that means that the euro is being bought. It means that the US dollar is being sold. That would suggest that the non-farm payrolls probably come in a little weaker than expected. And then we would wait for some sort of pullback, and then we'll try to get in on the pullback. So we're going to try to get in on a on a reaction low. Similarly, if the impulse move is actually to the downside, well, that would mean that the euro has been sold, means that the US dollar has been accumulated. That's probably going to be a beat in the non-farm payroll print. And then we'll wait for the impulse, then we'll wait for the correction, and then we'll try to get in on the short side. But what we're going to be doing is waiting for the corrections. What we'll do is we'll put a stop loss in at 20 and a take profit in at 20, and then we are going to try and trail the stop. Okay, so that if we do get stopped out, we would be hopefully stopped out at less than 20 pips. So if we get stopped at 20, we take a profit of 20, or we trail the stop and get stopped out, those will all be regarded as a successful trade. And just want to take a look at the time here. So we've got just a minute and 5 seconds. I just want to address the pullback. Once we get the pullback, we're going to wait for what we call a pivot. Let's call it a reference candle reversal. In bar charting, it's called a pivot reversal. But we'll just call it a reference candle reversal. And the reference candle is at least three candles. With the last candle, if it's to the bullish, it must be closed above the reference candle high. If it's to the downside, it must close below the reference candles low. All right, let's just see. We've got 25 seconds. So let's go through to our charts. We're going to be doing the trade on the 1 minute, but I do have an hourly and a 15-minute here to consult as well. And we shall see if we can come out. All right, there's a move. We still got 5 seconds to go. So there was somebody off the starting block pretty quickly. Here, we'll get the result now. Let's see what happens. Here we go. All right. Okay, so shooting down. So euro getting sold off. And let's go ahead and see if we can pick up some sort of numbers here. All right, so you can see that the non-farm payrolls has beaten to the upside. This is a very tough, whoa, okay, this is a very tough. So we've got a non-farm employment change to the upside, but we've actually lost on the unemployment. That's interesting. So that's why there was a little bit of sort of stop-start. And the actual average hourly earnings are down. So that's quite a challenging environment. Is any move here on the hourly? Let's take a look. Go down to the 30. All right, so you can see here's the real rate. So the real rate gapped up, and now it looks like it's coming down. Let's see if we can get some sort of position going. All right, so the markets are of the opinion that the loss in the unemployment rate and the fact that the month-on-month wage increase, the fact that that's coming lower, seems to have brought a bid into the euro, so to speak. So let me just bring that up again. I don't feel like I'm being particularly clear here. This average hourly earnings, okay, inflation in terms of wages, it was a miss to the downside. So maybe the inflation is starting to moderate. Unemployment, that's ticked up, okay, and it looks as if the market has started to bid into the euro. Let's see if we can get some sort of position on here. It's a very tricky print, to be quite honest with you. All right, so now we're looking for that reference candle. 20 seconds for this candle to complete. So impulse up, pull back, okay, which is what we said over here. Impulse up, pull back, and now we're looking for the 3 candles. Okay. Okay, here we go. Let's see if we can get in on the next candle. So we want to just wait for this candle to complete. And then we'll see if we can take 20 out of it. Just to reiterate, this is a live trade on a live account. Okay, we've got another 33 seconds. Let's just see if we can get this candle to complete above this candle. Euro certainly seems to be the currency that's bid. US dollar looks like it's been sold. Got 16 seconds. We're back above parity. That's interesting. All right, yeah, I think we can get in here. Let's put it on. Well, so we've taken a long position here, and you can see that the 20 pip take profits over there. Here's the 20 pip stop loss, and we'll see if we are catching this on the pullback or not. Now the idea is we want to try and trail the stop up if we can. So that's going to be the focus of managing the position. Now, I also want you guys to keep an eye on the stochastic here. The stochastic is in the upper quintile, means it's in the top 20%. That's good in terms of upwards momentum. You can see it starting to drop down. That's not good. That means that it's coming down towards our stop loss. We want this stochastic to stay in the upper quintile or pretty close, so that there's an underlying positive momentum. And let's see if that bulge looks like it's moving quite aggressively towards us. Very tricky trade, this. The data is very ambiguous in at first glance. All right, so here's the overhead resistance that we're going to be dealing with, the first resistance, so keep an eye on that. And of course, if it's got a heavy influence, that's not going to be great for our position. Okay, there you see the influence of that resistance. So price just tackling, there's a layer of sellers there. I'm still here. I'm just trying to, if I go silent, I'm just trying to watch the price action. It's very, very interesting. So this is a potential reference candle here. Let me just put the arrow in. This is a second reference, but we don't have price closing above it. So we need price to kind of close above this line here. So that's the first hurdle. This is quite dangerous. We've got 14 seconds, and there could be a bearish reversal candle coming in here. So we just got to mind that. 5 seconds here. We haven't had an opportunity to trail the stop loss up yet. So we're just going to have to be patient. Price looking quite ominous at the moment. If you take a look at the stochastic, it's rolled out of that 80 area, which is again not what I want to see. We'll just keep an eye on that. Very, very challenging. We're very close here. 17 pips. Oh, there we go. Unfortunately, we're behind the ball game right from the start. All right, so let's just take a look where it kind of fell apart here. We'll just dissect this over here. So we had a contra. Reference candle coming here. So you can see here is the highest high. Here's the 3 candles, and once it closed below that, and the stochastic fell out from the upper quintile, we're always going to be on the back foot. So unfortunately, this month's non-farm payroll didn't quite work out for us, and I apologize for that. Nevertheless, we shall endeavor to do it all again next month. Please join me again for that, and we will do it all again then. Thank you very much, guys. Have yourselves a good weekend, and we shall all chat soon.